Good afternoon, everyone. My name is Fiannce. I'm Senior Vice President International Banking at Amegy Bank International Banking Group. Our bank obviously supports bilateral chamber and their efforts in global trade finance and foreign direct investment for many years. And a specialized group of 100 people focused on just international banking within our footprint, which includes 12 states and West Coast, as well as the mid states and obviously this side of the country. I appreciate you making the time today from your busy schedule to participate here, and I'm pleased to have Jeremy and Luis and Mark from our partners at SBA as well as EXIM, and we are looking forward to our discussions here, the information they will provide. And anytime you have a questions, jot them down, and we are going to have a question and answer session at the very end.
My name is Mark Winchester, District Director, United States Small Business Administration, Houston District Office. I first need to say thank you. I need to say thank you to the Bilateral Chamber. I need to say thank you to Julia and Suki. I was sharing with Jeremy yesterday, the impetus for this meeting was I was at the Consul General for Vietnam, and they were having a trade and development event. And I met Suki there. And Suki and I said, we got to get together. And so Suki and I from the Bilateral Chamber met, and I just briefed her on SBA, and she briefed me on the Bilateral Chamber. And we said, we need to have an event just to connect with the Bilateral Chamber. So I want to let you know the impetus for this meeting arose from having a meeting with Suki, and I want to share that. Number two, I need to say thank you to Amegy Bank. Amegy Bank, I want to let you know they are at the top for SBA in Houston, in SBA lending in units. And so they know how to be number one in our region. We have 68 district offices across the country. We have 6 district offices in Texas, and we also have the Houston district office. So thank you, Sinem, for Amegy and for hosting this event. So I just want to say thank you.
And I did not pay him for that.
You know, and that's a good point. You know, there's action speaks louder than words. So I'm just sharing information on the accomplishments of Amegy. So thank you, Sinem. Number two, when I talked to Julia and Suki, they just asked if I would give a brief overview. They said I had 5 minutes, and I probably have already used 2.5, but I thought I would share just briefly the accomplishments of SBA. Last year in 2024, 1.5 billion in lending, and the credit goes to the lenders, including Amegy Bank. We have 130 lenders that participate in SBA lending here in Houston. And I was sharing with Jeremy, the 1.5 billion also includes surety bonding. A lot of people don't know that SBA has surety bonding, and last year it was close to 300 million in surety bonding alone. I was sharing with Jeremy, we had nearly, well, I like to be precise, we had over 880,000 in micro loans to micro enterprises. So this number of 1.5 billion includes nearly 300 million in surety, nearly $1 million in micro lending, and it also includes our 7A and our 504. Last year, over $1 billion in our 7A, which is really the umbrella for our SBA lending. Also want to let you know, a lot of people don't know that here in Houston, that we have federal contract dollars, over $2 billion in federal contracts. And I want to let you know that's $2 billion to small businesses. Likewise, you may not know this, on an annual basis, SBA budgets over $4 billion in R&D, research and development. SBA Houston is number 12 in the country in research and development in SBIR dollars. Here last year, 71 million. This is grants and contracts in research and development. Also, this was another reason, Sinem, why I wanted to reconnect with the Bilateral Chamber, is that we have technical assistance. We have over 120 advisors here in Houston, and really technically, we have over 170 SCORE mentors. And so really, we have over 200 mentors and advisors here in Houston. And they counseled and trained last year 28,338 businesses. And seen them, that includes also businesses who export. And I know you know that I'm preaching to the choir. And seen them, I believe that's it. And I'll turn it back over to you.
No, it's not it. It's
Okay.
not it, because you missed all the virtual trainings that you also have.
Okay.
In addition to
Oh,
all
thank
the SCORE and all the other
Wow.
consulting, they also have an amazing portal that is free, is paid by our tax dollars, that they have a
Yeah.
ton of training from how to start business to how to do what do you
Yeah.
call it, the search engine optimization
Yeah.
and everything else between. I mean, there's ton of programs that are offered for free. It's impossible for a small business to fail if they use it. Really, I swear by it.
You know, Seenam, thank you for pointing that out. Our Houston district office last year, 1,600 outreach training and visits by our staff. And Seenam, you're correct. You can go to sba.gov/training, and there's on-demand training. But we also have in-person as well as webinars through our office. I give you an A+. Thank you for mentioning that.
I know my,
Seenam.
I know
I
my.
know. Seenam, you do. Thank you. Thank you, Seenam. Thank you.
If, I know that we have already had Mark introduce himself, but if Jeremy and Louise, you also can take a moment.
Oh, introduce.
Introduce yourselves
Okay.
first, please.
Good afternoon, everyone. I'm Jeremy Foreman, Regional Finance Manager with the Office of Manufacturing and Trade, part of the SBA as well. Very excited to be here. Thank you to the Bilateral Chamber for the invite, and to them for hosting us. It's always a pleasure. It's always a pleasure as well to share resources available through the SBA, how we can help with your lending needs and also trade policy stuff. So I'm looking forward to sharing our information with you and answering any questions you may have. And then I'll pass it on to Luis.
Oh, sure. I'm Luis Noriega with the Export-Import Bank of the United States, EXIM. I'm a lender account manager. So I work with over 100 banks nationwide, from the money centers to the super regionals to the regionals, Amegy being one of them. And we'll discuss the EXIM toolkit, just three broad tools: short-term trade credit insurance, working capital guarantee program, and buyer financing overseas, after Jeremy speaks.
Appreciate that, both of you. And we're gonna start with SBS program.
So can everybody hear me okay? I first like to know who I'm talking to, so are there any active exporters in the room currently, or everyone go active? So anyone new to exporting? New to exporting?
All right.
Want to know who I'm talking to? Alright. So, again, my name is Jeremy Foreman, Regional Finance Manager with the Office of Manufacturing and Trade. Government agency within the SBA, our task is to grow U.S. exports and to grow U.S. exports. So we are tasked by the government to reduce U.S. trade deficit and help our U.S. small businesses to grow and grow the number of exports that are happening right now. What our role is as regional finance managers are to work with local lenders. So we work with Amegy Bank and other lenders. As Mark mentioned, we have 130 lenders in the Houston area that we work with. And this is one of our largest district offices, probably the number one, right? Yeah, so Mark does a real good job
Thank you.
with small businesses, and they all, like Sims said, there's a lot of resources available, virtual trainings and information out there that we put out weekly that you can tune into. So I would encourage you all, if you're not following the Houston District Office, to please do so, because it's a lot of information that comes out on a weekly basis that they have many events. Also, my role is to work with the lenders, to work with the small businesses as well. We're talking about doing these deals and the loans, the structuring, what qualifies, what doesn't qualify, and ultimately our goal is to get the loan across the finish line. So there, when you're working with one of our regional finance managers, typically the loan is probably not going to our general processing center, right? We're all working together. Like I'm working on a deal right now with Amegy Bank, Gentry. And we're all working together to get the loan across the finish line. And so they're gonna use your POP status to get it. So Amegy is a POP lender, so it doesn't have to go to the process there. So that's great. All right, so why small business trade matters? We know that 98% of exporters are small businesses. So our agency has to work with our small businesses because, hey, 95% of the consumers are outside of the United States. So we want to encourage you all to continue to export and help it, make it easier for you. Get you the resources you need, the working capital you need, answer your trade policy questions, all of that stuff we can do within the Office of Manufacturing and Trade within the SBA. So, and I say that because I'm on the finance arm of the Office of Manufacturing and Trade. We also have a trade policy group, right, that can answer questions that you may have about any tariffs or any, what's prohibited. You can also, we have EXIM that can talk about country limitation schedule, what countries are open for business, what countries are not. So there's a lot of questions that you may have that we can answer for you. All right, so access to capital, that 10 minutes, right? So I want to show you what's available through the SBA. Mark just touched on our 7A guarantee loan program. That number was 1.5 billion in the Houston market. That's amazing. I didn't know that number was that high. So it's really good, and it speaks to the work that is being done here in the Houston market. We have the 504 development program, our micro lending, so all of this made up that number, right? And where I come in at is on our 7A loan program. We have loan programs that fall under the 7A and our international trade loan. And so working with us, the SBA, we don't lend directly, right? We have lenders that participate in our programs that we offer up to 90% guarantees on the total loan amount. So that is a big risk mitigator for the lenders, right? Because you are doing business in a different country, right? So there's a lot of risk there. So to encourage the lenders to lend to our small businesses, the SBA has created these programs to offer guarantees to the lenders, which in turn allows the small businesses to get the funding they need. Also, within the programs, there is flexibility, right? These are our programs. The Export Working Capital Program is a revolving credit line program that is offered within the SBA. Right, it gives the lenders a 90% guarantee. It goes up to 5 million right now. That could be changing soon to up to 10 million, right? That's
just incredible
right now, as we speak. And this loan is structured, it can be structured in 2 different ways. And we thought about this in detail when it was released, because we want you to be competitive out there. And we want you to be able to go out and be able to compete in the competitive marketplace around the world. So this can be structured either using transaction-based, where you're leveraging your purchase orders or contracts that you receive from foreign buyers. And how it works is basically, if you are new to exporting, you haven't, you don't have a large amount of AR and inventory right now, but you're interested in exporting, you were able to go out there and win a contract or get a purchase order. What'll happen is you can have an export working capital line in place, the revolving credit line, that you can borrow against those purchase orders. So basically, you can borrow up to 90% of the purchase orders or 100% of your costs on those purchase orders, whichever is less. So essentially, the bottom line is you are able to fill that order without going into your bank account and leveraging any of your cash, right? That's a cool deal, right? To be able to do that. And also, you can also do it on an APL structure, where you have, accounts receivable built up, right? But in order to do that, you have to to win a lot of business, you have to get real flexible, right? To go and compete, you have to offer, your competitor maybe only offering 30-day terms, right? But to win the deal, you said, I'll give you 60-day terms, I'll give you 90-day terms, right? Under the extra working capital program, it doesn't hurt your business, it allows you to still have access to that capital, right? You can borrow up to 90% of your eligible AR under the extra working capital program. Also, you can borrow up to 75% of your inventory. So like, we knew tariffs was coming, right? So what a lot of business owners did, they bulked up on their inventory, right? And to do that, it took a lot of their cash, right? But under the extra working capital program, you can borrow up to 75% against your inventory to help you, right? To continue to have that cash flow coming in and continue to grow your business. So, very flexible program there. The international trade loan is a term loan program, right? It goes up to 25 years on real estate, right? You can purchase real estate with the international trade loan. Machinery and equipment, you can purchase with the international trade loan. Refinancing any business debt that you have, you can do with the international trade loan. What we use the international trade loan for the most is probably business acquisitions. All right, business acquisitions is a big thing under the international trade loan. So if you want to grow and scale your business, you're looking at, businesses you got an eye on. If you're an exporter or planning to begin exporting, then you can qualify for the international trade. The Export Express program is kind of like a hybrid of the two. They can take the form of the Export Working Capital Program or the International Trade Loan. So I won't spend much time on that. It goes up to 500,000, as if the other two went up to 5 million. But those Export Express, hence the word express, those are approved in-house by the lender. They do not have to come back to the SBA for approval. And then we have our Working Capital Pilot Program. This program was released last year, and it's been doing really well. And it basically, I can't tell you, we talked to a lot of exporters, and they wanted to know, what do you guys offer for our domestic side of the business here, right? Because most exporters probably do business domestically as well. And they couldn't take advantage of the benefits that the Export Working Capital loan provided for foreign business. So we created the Working Capital Pilot Program. It's a revolving credit line that can support domestic and international orders, so you can have it all under one revolving credit line. So it does the same as the Export Working Capital Program, as opposed to also this can go up to 60 months, right? And so this can go up to 60 months. And how we do it, we do it annually, right? So the lenders are probably doing it on a 12-month term and keep increasing an additional 12 months each year, so that you don't pay the full guarantee fee up front for this type of loan. And it's real minimal, right? So the first 12 months will only be 25 basis points on the guaranteed portion of the loan. And each additional year after that will add an additional 0.275% each year for 60 months. And how it works is, after the 60 months is completed, then we'll just issue a brand new loan to you as you start the clock on the 60-month count. And the Export Working Capital Program, it works the same way, but it goes up to 36 months.
Mhm.
And there's also October 1st, take my last 2 minutes to do that. October 1st, which is next week, right? We'll be releasing another loan program called the MARC. So under our new administration, manufacturing is big. So the MARC stands for manufacturers access to revolving credit. So it's a new loan program that's gonna be only for manufacturers that we're gonna be waiving the guarantee fee for, and that's gonna support manufacturers. So October first, that loan will be available. And it's a term loan, our revolving line of credit, if you go. 5 million right now, but it will probably be going up to 10. So, as soon as that is released, we'll share that information, with everyone, and, I'm sure the lenders will be excited about it as well. So, that's my time, guys. The thing where you guys are gonna share our presentations. All right, so, the thing where I share the presentations, now, if you guys have any questions, my contact information is right there. I wanna make sure you have that, and, be happy to answer any questions you have.
And I would like to just say that during the panel, we are gonna have some comparison between the two programs and you will be able to get more information. Now we're gonna listen Luis talking about EXIM's programs.
Great job.
Very nice. Yeah, so just by show of hands, who's familiar with EXIM or has heard of EXIM? It's better than average, right? I think usually 9 out of 10 companies haven't heard, or it's been a long time. And so it's always good to just kind of remind people of our footprint, what we do. So the agencies, we're 2 blocks from the White House, Lafayette Street, in the Lafayette building on Vermont. And basically, we've been there since 1934. And so the Great Depression, the first acting chairman of EXIM Bank came from Houston, just H. Jones, who's the chairman of Texas Commerce Bank. Sisters, but they do Morgan Chase, right? So there's double Murphy bed in the chair's office as the guy who worked hard during the Great Depression and carried on the mission, which is U.S. jobs through export. Kind of our biggest claim to fame historically was the entire Marshall Plan for the reconstruction of Europe after World War II went through our agency. So think of all that equipment, all that bulk agricultural, everything that it took to rebuild the West, frankly, after World War II, that they needed an agency big fit for that. Today, there's 150 plus export grade agencies around the world. Assume the Europeans, assume the Asians, China, are leading with trade finance, as a product attribute and basically, trying to gain market share that way. So, what I want to touch on today is basically just, mention who we are. And I'm just gonna touch on 3 products. It expands from here, but if you understand these 3 products, you gotta understand the toolkit. First one is, healthy capital loan guarantee program, similar to the SBA's. The difference is, we have a minimum or a maximum. And so we're uncapped in that sense. Had a transaction done in Tulsa for a company called Zico, if you're familiar with them. And that was $100 million. I thought a deal with multiple banks. Their need was performance, bid advanced payment bonding on industrial gas burner contracts around the world. This first 5-year deal we did. Receivables insurance, something we do every single day. We have EXIM licensed brokers nationwide, and we can always round robin to platinum gold level brokers and introduce them. But basically, this is a risk mitigation tool for you, where either on a single buyer basis, select risk buyer basis, multi-buyer basis, country risk only basis, we can offer 90 to 95% comprehensive cover on that cross-border exposure. So think of Taiwan as an example for country risk only. So, who's who of companies are just taking political risk cover, Taiwan, under an EXIM policy. Large corporates might have 6 or 7 single buyer policies, just on account that my running joke is if the country is an IA or AN, call me. Cost is roughly let's say 10 basis points for developed markets, maybe 40 basis points for developing markets. We have a calculator on our website, and what's built into that premium, which is pay as you go, so 30 days after invoicing, no cost to put a policy in place or it's all the front end, is basically that should they be late, should they be delayed payment or non-payment, you disclose, hey, I'm insured with the US government agency, I don't want to impact your sourcing from the US, would you like to get current? And 9 times out of 10, they think about it and they're like, I'm gonna lean on someone else, I'm gonna get current on your invoice. And so that's a hammer. And if they don't, you claim on EXIM Bank from your broker, we cut you a 90% US Treasury check, and we'll pursue recovery of our expense. 9 times out of 10, our collection will collect. And if not, we'll go through the embassy, we'll go through the legal system, it might take 6 months or longer, but you'll share in that recovery 5 to 10%. So fun war stories there. We've someone in the C-suite at a foreign company at a friendly country's airport didn't have a chat. And so once we turn something over to the Department of Justice, it's pretty real. And then lastly, buyer financing. We can do cross-border credit, and either through the banks or direct lending. And there's a short-term program, a medium-term program, which is generally capital goes up to 5 years. And then there's a long-term program, which is 10 to 12 years, exceptionally 18. And so basically that's, if you've ever been on a point aircraft, where airline chances are worth financing it. That's the #1 US capital good export. I've touched on insurance, it's very nimble, and it's a very easy product. If anything, we're a credit check for you on a foreign buyer. And again, what differentiates us from the market is that we're there in tough times. So we can basically take on Turkey or Brazil or Egypt, when the markets dry up. Because we're trying to get that last US export out of the world. Working capital programs been around about 30 years. And the value there's that we can carry the foreign receivables, we can carry export inventory, including WIP, including costs and excess of billings. Contract assets and soft costs related to the underlying kind of project. So this is almost a natural program for engineering, procurement, construction type companies. And then we do collateral relief on the performance bonding. So we're looking for 25% collateral, exceptionally 10%. That issue, same letters of credit or bank guarantees internationally. Examples under this program, we had a case, I was mentioning, it's Houston linked, so I need to be a little careful, but geological surveying, in the GCC, so the entire island of Bahrain, BAPCO wants to survey metal deposits near shore around the island. And so with the Department of Commerce and State Department and EXIM, we got a letter of interest on their behalf of BAPCO. We did advocacy to help win the contract. There were 12 bidders, 6 of them were Chinese. The other North American bidder was Chinese owned. Found out that there was bid rigging going on unintentionally. And anyway, both Bahrain and the US, we wanted a Western solution, and so Houston based company won the contract. And so for the next 24 months, they're working on $1 billion service contract. And after that, we're replicating throughout the GCC. This country will be public in 3 years. So fascinating story. But anyway, they needed this 10% performance bond. $1 billion contract. That's a chunk of change. And so we're looking for 10% collateral. And whether there's cost benefit recognized or there's third party collateral. That's they want to leverage a contract. So anyway, by the way, the fifth naval fleet of the U.S. Navy is in Bahrain, and so no one's going to be surveying waters around Bahrain except us. Medium and long-term financing, this can run, this could be $1 million piece of equipment, or it could be kind of project related with multiple pieces of equipment. And so generally, we can finance 85% of the US contract value. And then we can capitalize the EXIM exposure fee, and then we can gross up 30% for local costs, make ready work. If we're aware of Chinese competition, we can soften our US content requirement, extend our tenor, and do more local cost financing that neutralize potential user bidding. And there's probably about a dozen active medium-term lenders, New York, Miami, that can, bank and non-banks, that can do kind of these 5-year, $1 million equipment financings. And then there's, a slew of banks that can do kind of project related financing. We do everything from corporate underwrite to the pure structured project financing. Latest win against Houston, $4 million LNG project in Mozambique for Total, and with an extra for Exxon. So the project it takes a while to put together, but those are very nice ones. And then I wanted to touch on a variant of our long-term lending capabilities, Make More in America initiative, MMIA. This started under the first Trump administration and related to LNG export terminals. It's carried forward by the Biden administration. Also environmental, benefiting projects. And then, it's opened up under the Trump administration under all of the above energy strategy. But, in terms of reshoring, in terms of US manufacturing, in terms of US CapEx, if there's an export nexus for the project, and it's 15 to 25%, pro forma, 15% if it's small business, 25% otherwise. We can finance up to 80% of that capital expenditure on a US project. And if we do a direct loan, basically we can offer 10, 15, 20-year term financing, fully committed on that CapEx. Our funding cost is US Treasuries, basis points. So 10-year US Treasuries is like 4.25%, maybe a little lower than that. So that's 5.25%, 20-year money. So it's kind of like my mortgage, which I think my state will pay, not me, at some point. But anyway, so this is gaining traction. We did 6 transactions last year. Smallest one was $6 million for a company called Aquatech in Pennsylvania, water filtration equipment company. We did one here in Houston from a company called Packwell. They do they're containerizing pet pellets for the refiners, and put they built a facility on Port Houston right across from the Bayport container terminal, 50 million. And I guess on the more exotic side, take a look at a company called Beta Technologies. They're doing kind of these little flying vehicles, EVs. Next time you're in Tampa or if you're in New York, you get over, you see when we fly. But the values in the quick charging. And that was over 50 million. So public information, Make More in America's we have 100 applications now. 6 deals last year, 100 applications this year. And that's it. Restrictions, our charter basically, we're not particularly good at defense related goods. And there's some requirements to look at US flag vessels if available. We have a country limitation schedule on EXIM.gov. If you want to take a look country by country and see kind of where our stance is. That's a good tool. We're gonna open in Argentina, by the way, so that's fresh, exciting. And that's about it. Just we want companies that have an operating history in some way, shape, or form. And any government support, they're gonna ask you for a UEI, unique identity identifier, just like social security. That also allows you to bid on government contracts.
Thank you, Louise. This conclude our introductory session for the two programs. Now we're going to talk about a little bit about the differences and similarities and get some answers from our experts here. And they're going to be on hot seat because I kind of know both of the programs. I'm going to check the answers here on your behalf. So my first question, so I'm sure that audiences here they caught that two programs, especially the working capital, almost looks identical. So my question to you in both of them from the eligible person perspective, what is the definition of eligible person in general terms from EXIM or SBA? So I'm targeting this question as to whether there's a US citizenship, etc. is required. What are the guarantees may be required? So if you briefly talk about the eligible person definition from what programs, working capital only, that would be really helpful for our audience to understand why they should pick one or the other for their particular company or circumstance.
Thanks for your question. So just recently, our qualifications has changed for eligibility under our working capital loan programs or our 7A loan programs as a whole. Under the new administration, the first qualification is that you're gonna have to be 100%, business must be 100% owned by a US citizen or have legal permanent resident status to qualify for our loans. So that's one of them. As far as your business as the business, we want to see a solid 12 months of operating history. If you have proven experience in that particular industry, that can qualify your business as well. And then the rest of the rules are just gonna, we don't have like a content requirement or anything like that. So under our working capital programs, it can allow for drop shipment. So if you're not sourcing the product here and your customers in a different country, you can still do that under our working capital.
Thank you.
And if I could, Sinem, just interject, just want to let you know, Jeremy had an excellent slide up there on the SBA programs. He listed approximately 9 loan guarantee programs. I want to let you know SBA has nearly 24 loan guarantee programs, including the international loan program. And want to let you know the 7A program goes up to 5 million. Jeremy also listed the 504 program. That program goes up to 13,750,000. So want to let you know the breadth and depth of our SBA loan guarantee, that we have nearly 24 programs, including our international trade, the WBC, the MARC program. But I also wanted you to be aware of the 504 and 7A. And I also wanted to share with you, we also have over 300 venture capitalists in the US that can borrow up to 175 million from SBA, and they can turn around and also offer debt financing. And we have SBICs right here in Houston that can offer debt, equity, and a combination of debt and equity.
Mm-hmm.
And similar to EXIM, there's no ceiling on those debt and equity loans. And so just wanted to share that with you.
Thank you.
Yeah, thank you.
They can reach out to you separately if they have specific questions. Luis?
Yeah, I was just gonna add that, just for better or worse, EXIM's charter sunsets every few years. So our last charter was a 7-year deal. It expires December 31 of next year. The draft is already in the White House, 1 year ahead, and we've asked, for it to be opened up some more, but there's always been a US content element to this. Labor has been a very instrumental in requesting that. It's 50% for our short-term programs, and potentially higher for our long-term programs, right? In the case of Make More in America, we basically, the export nexus element of the project is akin to the US content. There's a restriction on defense-related goods. There's 6 exceptions, but like patrol boats or, non-lethal, defense goods, they don't have a restriction at SBA. They have a restriction on, I believe, on ownership, just legal status of controlling owners.
Yeah.
We don't have that, so we can accept foreign-owned companies. A lot of banks are active in both SBA and EXIM, and including Amegy, and they'll put the customer in the right program, right? Depending on their life cycle or the intricacies of the individual deal. We play well in the sandbox.
Yep.
And there's benefits, there's pros and cons to both agencies and programs.
And Sinem, I just wanted to interject. Luis makes a very good point. Amegy is a preferred lender for our 7A program, but it's my understanding they're also a preferred lender with EXIM Bank.
Right.
So just wanted to point that out.
Thank you. I believe that we are the largest EXIM lender in Texas.
Yeah, so for working capital, it's over 50 banks. The list of preferred lenders for SBA is broader than that. It reaches down into community banks. But the likes of Amegy have like our highest level of authority, which is up to 50 million fast track.
25 million.
25 delegated,
Delegated.
50 million
Yeah,
fast
50
track.
million fast.
But the program's uncapped above that, and basically we just can fully underwrite and go to our board if we have to.
Thank you. And we have never had a bad exam. I mean, EXIM exam. They audit us. See how you're doing. Thank you. Again, I didn't pay them for this. So thank you for those answers. I know you touched a little bit about the restrictions. SBA, from SBA perspective, I particularly want them to understand better on the content requirement of both programs for working capital program, as well as maybe the medium-term programs a little bit as well, just to kind of drill them down a little bit. Jeremy, would you like to talk about the restrictions and what are the proceeds can be used for under the Export Express or Export Working Capital programs? Not necessarily the medium terms, but the typically working capital programs.
Yeah, so just turn it on. All right. In terms of restrictions, we don't have many restrictions, and as on the content, only restrictions, we're gonna follow the EXIM country limitation schedule. So if you're exporting, you're doing business in those countries then funds won't be available to you through the SBA. Other than that, and content requirement, we don't have a content requirement, and we don't have a minimum dollar amount as well. But we do, our max is 5 million. And so we're open for business. So we're typically gonna look at all transactions and make sure that it qualifies. So again, I'm gonna be hands-on on all those transactions. So we will, definitely make sure that everything is structured properly and all the qualifications are met. But content requirement, we don't have content. It does not have to leave from the United States. So, sourcing it in China, shipping it to another country is fine.
I think that's one of the biggest differences, because with the EXIM, there's a limitation that the product must be shipped. Even though you're building some of it here, some of it elsewhere, that's closer to where it's going to go to, and you want to assemble it in that particular country to ship it out from, then it becomes EXIM ineligible out of the blue. SBA does allow that. Would you like to elaborate, Luis, in the restriction and content requirements?
Yeah, so we do have a US content definition, and we do have that restriction in our charter. I wouldn't over engineer it. I mean, I would basically, bottom line for our short-term programs, the US content hurdle is 50%. It's all direct and indirect costs, including markup and, I mean, excluding markup and profit, but including, SG&A and other allocations. So as long as when you're looking at a sale and where this can get granular is if you're looking at it at a contract level or at an invoice level, you could have a mix of products. Some were sourced domestically, some were sourced internationally. They're components built into final good for sale. But I would basically just take a look at the legal definition, and if you're comfortable making that legal rep, don't go beyond that. We're not going to test for it. Lender's not asked to test for it. We don't want you to make a bad rep, but we're looking for at least 50% US content. If there's Chinese competition, we can go lower than that, right? So I had a case in Dallas, telecom company with a 5G contract in India, at 10% US content. But guess what? We're not going to lose the 5G race in India, right? So we brought in our China transformative industries team, and we have some capacity to basically go around our rules on that front, right? On our medium and long-term programs, they tend to be capital goods. Maybe there's a service component embedded in it. I would argue there's a lot of intangibles like licensing and things like that that go into some of these contracts. So there's robust US content, but we can, generally we're looking for standard is 85% US content. If it's below that, we can lend up to the amount of US content, and then we can gross up for local costs, 30% automatic, sometimes 40 to 50%. And so we're getting it's something beyond the amount of US content in our financing arrangement, so it's in the charter. Let's just understand the contract, understand the procurement. I mean, you're not gonna ship steel from Turkey to the Middle East. You're not gonna ship it from here. That makes sense. But maybe the stuff that has the higher gross margin is of US origin to begin with. So let's just dig into the components of a contract.
Our EXIM partners has been great because under the delegated authority, bank can approve a transaction on its own without going to EXIM for an approval. But there are some transactions that requires, like EXIM is a credit policy that we have to violate it for certain clients. And that could be collateral availability, that could be term. There are different reasons that, or the country limitation schedule, even at times that, in order to support our clients on that particular transaction or the market, we have to go and ask for exceptions to the policy. And EXIM has been very supportive. If the reason can be mitigated for that particular exception you require or ask for, not require, but to get it done, they have been very willing and very positive to support our exporters. So it's not like, I never seen that as a black and white. If it serves the US ambition for trade deficits issue and grow exports, they are very willing to work with our clients, us to help our clients, I should say. We briefly talk about a lot of the other things so far that regarding the both programs, and I think we are running out of time as well. Neither one of you mentioned any inventory reliance. You both mentioned that receivable can be export related receivables can be advanced up to 90%, and export inventory, if I'm catching the SBA side as well, can be advanced up to 75% on the working capital program. Is there any inventory reliance for the programs? If you could elaborate, please, on those for our audience.
Yeah, so under the transaction specific formats, we would look at a single project and underwrite to that project, right? So we can be 100% inventory reliant until you hit a billable milestone. So an example of that, Houston based as well, was there's a company that was an OEM to Baker Hughes. They manufacture wireline trucks. And someone overseas at ONGC, looked under the hood and said, that's the OEM. I'm going to go straight to them, and basically awarded them a 12 unit contract, 60 million, life changing for the owner. margins were great, versus selling through Baker Hughes. And, but that's a $60 million transaction specific need, on the sale. So basically we're 100% inventory reliant while they bring in the chassis, build the equipment on it and, ready for shipment and sale, however that's staged, right? So depends on the format. Revolving line, 75% inventory reliance, transaction specific, 100% inventory reliance.
Yeah, so under the export working capital program, it can be structured, as Luis mentioned, with, on the ABL side of it, where you're leveraging your AR, you're borrowing up to 90% on the AR, 75% on inventory. That's one way to structure it. But there's another, we also have the transaction side of it, whereas you're leveraging the POs and contracts. And so on that side of it, then we're looking at the particular buyer, right? Who your buyer is. Are they, and you can borrow up to 100% of your cost or 90% of the total purchase order, whichever is less. And then so that's kind of how we look at it. And when we're looking at transaction specific deals, we're looking for, we're looking at the past history with that particular buyer. We're looking to see if they're offering you some type of LC. We're looking to see if you're gonna, before we can make a decision on it, we're gonna recommend that you get some type of credit insurance or anything like that. So we work closely with EXIM guys all the time, right? Because in the perfect world, we want you to use all of our programs, and we want you to graduate out of an SBA program into an EXIM program.
Right.
So a lot of times, if a borrower is getting an SBA finance program, we also leverage EXIM for their credit insurance or their receivables and things like that. So we want to make ecosystem to kind of help you guys propel you forward.
And Sinem, if I can interject,
Please.
I know Sinem had mentioned that there's really two options. There's actually multiple options. I mentioned the SBICs. The SBICs can loan up to $10 million and they can do $10 million debt and equity that I wanted you to be aware of. Another thing, Sinem, that I wanted to share with the business owners is that we have advisors with NASBITE international trade certification. And especially for those who are not familiar with SBA or EXIM or just learning about export financing, that we have advisors at no cost that can help you with your international trade business plan and also walk you through the financing. And it's called the Texas Gulf Coast SBDC. And we also have over 170 SCORE mentors, and we have SCORE mentors who have expertise in international trade as well that I wanted to share. Thank you.
I'm going to open the floor for questions. I know we had a couple of questions earlier that you wanted to ask. So we have a few more minutes left. So if you have any questions, this would be the time to ask.
Yes, learn about like how the two entities treat software manufacturing. And we produce software here. Is there any special programs for that?
I could take that.
Mhm.
Okay, so you don't have to be manufacturing something to use the program. If you're exporting, if you are receiving funds from abroad, you have a contract with a foreign company, you are eligible to export services. And we have one client that they don't have any goods. They only export services. And but they have to put out bid bonds and performance bonds every time they have a contract. And they do have working capital needs. So they use the working capital program under the EXIM. And they've been very happy with it. They've been growing their business and they are in close to 100 countries with their services.
Yeah, well, this is software. So we make the software in Houston and we resell to the companies that you mentioned.
Do you
before.
license it or do you sell it?
Sorry?
Do you license it or do you?
Yeah, we license.
You license it.
We take license.
You know, Sinem, you mentioned working capital. Want to let you know, and maybe Jeremy, you can share about it on our export working capital. If it's paid in less than 12 months, the guarantee fee is 1/4 of 1%. Is that correct?
Yeah, 25 basis.
Yep.
Yeah.
Mhm.
Yeah, so something for you to be aware of is you can borrow up to 5 million export working capital, 90% guarantee, and the guarantee fee is less than 1/4 of 1%.
Okay. That's pretty good. We're actually manufacturing right now for developing software for a company in Dubai.
Mhm.
But they're international, they're based there.
And Sina,
That could be really helpful.
Jeremy, could you also talk about the manufacturing financing, that the mark and the amount that it goes up to? Can you just reiterate that again?
Yeah, so again, so the Mark loan will be live next week on October 1st. It's called the Manufacturing Access to Revolving Credit. It's gonna be a little different from the working capital lines of credit, with like the actual working capital line. So basically, under the Mark, you'll be able to borrow against fixed assets, right? Or projection based. Under our actual working capital program, you're only leveraging receivables, purchase or inventory, things like that. The Mark is gonna be a little different where, and on projections, you can show projections that, improve those. Then you can potentially be approved, and also if you had some type of other fixed collateral to get you approved for the loan, we can look at it that way as well. Under software, we can support software transactions. It just, one of the requirements though is it's gonna be it's sold, right? So we can't, like any type of subscription based type deal where they don't actually own the product. We can't support under our program.
Software as a service.
Yeah.
Luis, would you like to jump into?
Yeah, I mean, there's software, and there's licensing embedded in all sorts of contracts, equipment has a software component to it, and et cetera. And so we can finance the buyer up to 85% for that total contract, including a service element. The issue with subscription is that a lot of times that's not in arrears, it's upfront.
Mhm.
Right, and so what is there to finance, right? Because they've prepaid basically for
Yeah.
that month or whatever quarter. And so that's been the challenge.
Yeah, in this case, it'd be about 7 months worth of
Yeah,
development.
yeah.
So we need to finance that period. So it sounds like that working capital thing might help.
Yeah, and we did, I mean, so even Microsoft, right, we did basically like enterprise software to a foreign company for 5 years.
Okay.
So we've looked at it. We have an engineering division that can opine, but yeah, services and technology are ever increasing part of US exports.
Thank you.
Any other questions from the audience?
On the export receivables insurance, does it apply with state-owned clients?
On the account debtor, the foreign buyer,
Yes.
Yeah, absolutely. Yeah, absolutely. I mean, take a look at exim.gov, when you're bored, and just on the search screen, just do country limitation schedule. And it'll pull up, online, and then you can download a list. We update that periodically, maybe 3 times a year. We have an economics team. It's interagency, so it gives you the US view on over 150 countries. Some are legally prohibited, right? Cuba, whatever. And some are more of a credit concern, historically Argentina, right? But it'll show you for public sector, if we're open, for private sector, if we're open, there's some footnotes that are relevant, footnote 13. And usually that footnote 13 basically would, in the worst case, would say, okay, we can insure this if it's a sovereign obligation, Ministry of Finance, or if it's a letter of credit or Bank Obligor backed, or if you can externalize risk, right? So when Mexico tanked next door in the 90s, basically they did Yankee bonds, and those were secured with oil proceeds, right? And it carried them through a trough. So that's, in the worst instance, we're looking to externalize risk, right? But yeah, again, countries ending in IA or AN, give me a call.
Like we was mentioned earlier, country limitation schedule applies to both SBA and EXIM programs. And when you go to the country limitation schedule, just don't look at the country, oh, it's in the list. Actually, look to see if there is any notes, because if there is any notes in any country, even though it might say yes, it's conditional. You're gonna meet that requirement in the notes, and that requirement could be acceptable commercial letter of credit issued by a bank acceptable to the EXIM and the bank from the country that's importing the product. It could be, as you said, the Ministry of Finance must put the signature on the actual contract or the loan. So those are the details that you would be looking into. So don't just look at the list and, oh, there it says yes, and it's in the list, I'm set. So look at the notes specifically, because it changes based on which product you're looking at. If you're looking at, a buyer's financing, or if you're looking at working capital financing, those notes may change. Insurance is also included in that too, credit insurance. I think that concludes our program.
Just right before.
Okay, one more question and that's it. Okay,
Yeah.
everybody's okay with that. If you need to leave, you could please, if you have another meeting to go, you can leave. Time.
With the loans, like things like 100% US ownership is a condition, but with any kind of export receivable insurance, is it also the same condition valid?
EXIM doesn't require ownership to be US citizen. Only SBA does.
Only the SPA.
Yes, or EXIM can support all companies owned by friendly, I guess, countries. Obviously, they're not gonna have a North Korean on any of the ownership, or Russian, but yes, if they are from eligible country, then there's no problem.
Yeah, so yeah, optimally, it's a US seller, right? And it's at least 50% US content being exported from the US. And in that case, our insurance can cover basically up to 90 to 95% comprehensive country risk and commercial risk. If you're selling to a subsidiary or an affiliate and then on selling and the market, we can bring them in as an additional named insured. And maybe the advance rate or the percentage will drop a little bit, maybe 75%. But there's a way to accommodate how you transact sales internationally. But we're predominantly looking for US, the rest of the world trade flows.
And I'd like to add that because there are certain countries that in order to get paid, you have to actually establish an entity in that particular country. If that's the case, so US exporter must have another company in pick a country, let's say Algeria. So we have to add that particular entity to the loan as a co-borrower, so we can actually use the receivables, invoices issued in that country inside the eligible collateral. So that's possible, and eligible inventory as well. So in any case, if you're required to have a separate entity in that particular country, that company can become part of our loan facility as a borrower, and assets will be counted against the collateral pool.
Okay.
Mhm.
Okay, thank you.
With this insurance, will it cover like currency fluctuations in the other countries?
Yeah, so technically the not fluctuations per se, but currency inconvertibility. So if something happens in, I don't know, Egypt and dollars are not accessible, right? Except through the harshest of circumstances, we would cover for that event. Okay, but the driver for a claim is basically delayed payment or non-payment. As soon as they're 30 days past due, up to 180 days past due, you have a claim filing window, and through your broker, you would notify and if they don't pay, you claim on EXIM Bank as soon as you can. Okay, so it's currencies fluctuate, even the dollar, and I mean, you got to hedge for that through a bank, but currency and convertibility would be.
And I also would like to add that the invoices in foreign currency has to be accepted by SBA because that's an exception. So we need to get it separately accepted into as currencies you can invoice in. And if they are not hedged, if you are selling, we have one client that they are selling in Kuwaiti dollars, I mean dinars, I don't know. So advance rate goes from 90% to 70% because you didn't hedge that currency risk. If the currency risk is hedged, you can have an advance rate on the working capital loan up to 90%, but if it's not hedged, only 70% is covered. And it has to be pre-approved. So if it hasn't been pre-approved, you have to invoice in US dollars.
Thank you, C.
My pleasure. I think that's a wrap.